Hello, hello. Welcome to February 24th. Alberts are leading with RCL at 281%. There it is, 281%. That is fabulous. We are our last bar low. We are going to initiate another rule, which usually does not get triggered that often, but man, this market's been crazy this last week. So anything over 150%, it's last bar low. Just take that money off the table before someone else does. Look at this also too. We've got 1182 against 1968. Let's go look at the numbers on that. If we're able to hold 1968 and able to hold on to this, the left side call 1180, the O will drop down to 788 on one trade, on one contract. Imagination, people. If this had been 2, 3, or 4 contracts, this would have been a winner's circle trade. That's what it would do. Excuse me. Getting to. Oh, a little excitement there. Yeah. So 281 for RCL. And the account jumped over 7,000 today. And we ended up with a buying power of 992. And we are going to initiate a search at the end of the conclusion. DIA got stopped out today for a loss, and that's what returned some money back to the buying coffers, and we are over 10% of the capital is when we initiate a search. If this had been under $700, we would not be doing a search today. So we're going to be doing a search. So RCL, 281%. Let's move on now to our next trade of interest, and that is American Express. American Express hit 192. Look at that, 192. And look at our ratio. I'm going to squeeze out just a little bit to see how this ratio, look at this. We closed up, this is the third. That's the fifth. That's the sixth. We are closing above, almost at the seventh ratio. We did close above the seventh ratio. Let's see, the close was 139.89. Nope, just shy of that ratio right there. Now, if we hit 10x, I mean, it's like, oh, where are all these rules coming from? Well, they're hidden in the closet because they don't come out of the closet that often. But hey, it's gonna work. If this does not get stopped out and hits 10x, we take all the money off the table, just right off the top. Market open, at market, whatever, just grab it. Just get that money off that table. All right, the American Express, well done. 1879 against 860, approximately. It'll take us just shy over $1,000 owed. We get out at the 860 mark, which is up here. All right, that going said, let's go on now to Bank of America. Bank of America did nicely. This was in the doldrums for a longest time. And we'll zoom in a little bit closer. There we are. So there's our ratios. We have to zoom out to see our ratios. So our third ratio is here. It's closing in on the fifth ratio. That's the fourth. That's the fifth. And we're at 192. We're at last bar low because we are over 150%. No, we are not last. We're at last bar low. Why? Oh, we're at last bar low. Aha. This was a discussion that came up about when to use last bar low as opposed to lower lows, lower low. Okay, the stochastics is at 95. At 95, the top is 100. It only has a 5% margin between it. It will saturate. Price will indicate that it can go into flatline or start rolling over. So with the high stochastics, we're looking at anything over 90, we're going to look at that last bar low possibility. Again, the exit rule at the 100 ROI, lower low or the last bar low, both are okay. You have to decide if you want to take that money off the table. Okay, Bank of America again. So only 2 contracts producing 573 against the 2187. So that's about 25% takeoff of the Brock. But still, rocks become pebbles, pebbles become profit. Profit does payback. All right, moving on now to Berkshire Hathaway. Berkshire, here it is, Berkshire. If we don't do this, there'll be no Shire. Okay, guys, you know what movie that's from. And moving on. Okay. We are at the 100 mark. We are at the third ratio. We are doing lower low, higher low, lower low, higher low, exit. And the stochastic is only at 88. So we are going to stick with the higher lows, lower low exit for Bank of America. But Bank of America crosses that 150. It's going to go last bar low, done. Bank of America is 573 against 1102. That's almost. If you can get a little bit more help out of it, that's. Oh no, I'm talking about Berkshire. Berkshire is 100 for 70. Well, I'm so excited. This is cool. So, yeah, it'd be less than 700. Be less than $700 here at the Berkshire. So there we are. Okay, TJ Maxx. Catch my breath here. TJ Maxx. Okay, TJ Maxx has not closed above the third ratio. The exit is still down here at the initial 1-to-1, 1 risk 1 to get at 3. Okay, so there we are with TJ Maxx, and then Capri. And now I come up to Capri. Where are you, Capri? There you are, Capri. And here is Capri. So there's Capri, hasn't knocked out to his third ratio, but you do notice that we have the same pattern. The 30-day moving average is ever so slightly inclining up, indicating an uptrend. The stochastics is hovering right there at the border of the 80, which, remember, just because it crosses 80 does not mean you start going short. It could be also, it means that stochastics is going into strength, and you don't want to be trading against strength. Now, we're going to go over now to XLC. Now, XLC, I'm going to bring it up because the reason is that there's a lesson here. And let me go ahead and get it in here. All right. The lesson is that this was the trade was indicating a uptrend, and I went for a put. So I was going, this is a counter trend, and the reason why is because we have these indicators indicating weakness. The stochastics is bending down, and the MACD histogram is coming down. But also look, our 1-to-1 ratio and price is coming and is ever so slightly trying to get through this barrier. If it gets through, fine. If it doesn't, all right. So that takes us now to DIA. DIA got stopped out today. It was a put, and DIA got stopped out. And again, I did note this was a contrarian trade. Why? My rating system said that it was an A mode in the up direction in a buy with an implied volatility of 1. So it's like, okay, wow. So look what happened. Got knocked out real good right here. Knocked out right here. That would have been a hammer trade for those who follow candlesticks. This would have been a hammer trade, and it would have paid off very nicely. But we didn't do it, and we got stopped out. We lost $75 for the $2 in fees, $77 loss for the trade, $12.94 on the past owed to a new carry of $13.71. All right. With that said, let's go on to the scanner. Well, the down scanner showed us 0. The up scanner showed us, I have Adobe, Arena, BioMerm, ITB. We have a good selection here. So what's going to happen will be is I will now call up my loss leaders, and I will then go through my loss leaders and see which ones in the qualifications for the options for tomorrow. And that is a conclusion of today's report of Losers Become Winners, February 24th. Alphas lead RCL at 281%. And I thank you very much for stopping by and checking it out.